So after we looked at flags, let's look at some other traditional chart continuation patterns I look for. Those are triangles, flat bottom triangles, head and shoulders, double top or bottom fake outs, and that's mostly it. Vertical ranges also fall into the category, but let's take a look whether we can find some of them. Here we have a triangle broke out. So we broke above this double top here, came back into that range, broke above, came back into that range. We retested this double top here actually. And then when we broke again above this trend line here and above this double top, then it was quite clear where price would go. At least allow us to go to break even around this high here, which is also R1. And it did. And what else happened? Here is the flat top triangle. So when we get a flat top like this and we are converging into direction of the trend, so we need two highs at least, a double top, and two lows down here. And once we break above this line, it's also a great time to join the trend with our stop below here. What else do we have? Head and shoulders. This one here is, for example, one. Yeah, left shoulder, head, right shoulder. So you could enter long here, as always, if the other conditions apply. Here we have another condensing triangle. If they happen within a strong trend and the other factors play as well, like here we got a 1, 2, 3 and a break above this trend line, then usually I will join. Let's see what else we got. Here we have a double bottom, came above this high here, then came down to the pivot, made a double bottom, and then our stochastic pointed up nicely, so this would be a really nice entry. Let's see whether we can find some on another pair. Yeah, here we have the head and shoulders, for example. It's hard to spot here, but here's the left shoulder, head, right shoulder. So if you go down to the M1, as I said, is sometimes these are much easier to spot. So left shoulder, head, right shoulder, and once we break this trend line here, yeah, we got a reaction here. We are good to go. Go to the M5. This would be a really nice entry, especially because we broke above this whole consolidation here. We retested the trend line, this whole thing here. And if we go to the M15, we zoom out a bit, then you can see that we made this drive up and we are now in this gigantic flag, which is a bull flag. So another continuation up was to be expected, and that is exactly what we got when we broke above this zone here. So let's go down again. Yeah, so once we broke above this zone again, this was a very pretty entry here. Happened in the morning during the Asian session, so I usually wouldn't trade this on the euro dollar during the Asian session, but I'm pretty sure if we got a move like this on the euro dollar, we got one as well on the USD JPY or the Aussie dollar. So we got other opportunities to enter on pairs which are more heavily traded during the Asian session. Let's see what else we can find. Here, for example, we got a double bottom fake out. So we got this, almost triple bottom actually. We broke below it and then came back above it, and we broke above this 1, 2, 3. Once we broke above this point here, roughly, we can go long. What happened here? This is another continuation structure. You can paint it like this or like this. Actually, this is a condensing triangle, yes. What do we have here? This is a flag, classic flag, parallel channel, and they all trade the same. Once we identify them, we wait for the breakout in the direction of the trend, and the stocks must fit, and our RSI must fit, and the overall price structure must be intact, and then we are good to go. Another condensing triangle. These happen a lot, and we need to be comfortable with them. Here another kind of head and shoulders. They don't need to be perfect. I mean, how often do you get textbook examples of continuation patterns? Maybe one time per year. Here we got again a flat top with a converging bottom with the trend. So once we break out, but the stochastic was doing complete crap down here, so we wouldn't enter this, but as you can see, we broke out, retested it. Yeah, so I will make a PDF for you guys where I show you these patterns: triangles, flat tops and bottoms, triple tops, double tops, triple bottoms, double bottoms, head and shoulders, fake outs, and flags. And these are all the continuation patterns we look for, and if we see them on our charts, then they are good to take note of for either getting in before we reach the barrier of such a pattern to go to break even, or to trade them at the breakout if the other factors comply, like stocks, RSI, and overall price structure. Here's another flag. This one was steep. We had 1, 2, 3 shafts to the top, and then a reversal in accordance with the overall trend. So you see, it's always about price structure. Even if you don't know these patterns, it's always about price structure. Highs and lows, highs and lows. All these patterns, they are readable with highs and lows. Thinking about what price is doing there, what does it mean for momentum. But knowing these, I mean, it doesn't hurt. I recognize them with my bare eyes, so I don't paint them into my charts anymore. But for the beginning, I suggest you do that. You will sooner or later become very comfortable with them.